Well, it's good to be back. I've not put a video up for the last few days. Unfortunately, I've been stuck in bed, very ill for the last few days. Today's the first day I've actually been able to leave the bed, and I thought, you know what, I'll give it a go recording a video for you guys, and yeah, we'll see how we do. But if I look a bit not too great, or I don't have as much energy as normal, you guys know why. But yeah, I mean, coming to record a video today and open up with this. The Nasdaq registers lowest close since July 2020, and if we have a look at the Nasdaq down here, you'll be able to see now that if we take the close from yesterday, or where it's actually at today is recording this video, you'll be able to see that we're actually now from the 14th of February 2020, we're now only 11% up in that time frame. Can you believe that? You know, over 2.5 years up 11% in that time frame. Like, the market is just getting beaten and beaten down. Like, this is unbelievable what we are currently going through right now. And it's when you look through the progress of what these businesses have done in that time frame. Now, I was looking through Adobe, for example, and if we look at what Adobe has done from that time in 2020, 11 billion in revenue. If we go from what it's going to be closing off this year at 17 billion in revenue, and it's doing 6 billion more in them 2 years. If we look at the earning side of it, 3 billion in revenue, we're going to be doing 4.8 billion, well, even a bit more than that, 4.7 in profit by the end of this year. It's very same, if we look at something like a Google, for example, which obviously it is in the Nasdaq, 161 billion up to 278 billion. That's over 100 billion more in revenue, and profit wise, we've gone from 34 billion up to 72 billion in profit. So the profit's massively increased as well. And same for PayPal. PayPal are having a little bit more of a dip on the profit because they are currently going through a few changes, but that's going to rectify in the next year. But even their revenue is up massively, and these are some components, for example, of the Nasdaq. And other stocks, Adobe alone, I think, is down like over 50%. Google's down over 30%. PayPal's down, over 50%. And you can see here, like, it's just insane. Like, I cannot believe how bad this situation is getting right now in the markets. You do look at some of the stocks that are down these sort of amounts. You are starting to now look at some of the indexes that are down this much, and you do generally like justify, do we deserve to be down this much right now? And funny enough, because I've been stuck in bed the last few days and I've got nothing else to do, I've actually started to watch TV for the first time for a long time, and I've been watching the new documentary, or the TV series, This England. Strange, I always thought it was This Is England, but it's This England, and it's like following Boris Johnson around during the CV times. And I was watching that and going, oh, like, it was so bad that period of time. And I'm generally looking at that situation, thinking how bad it was. And they mentioned on the program, actually, talk about the markets, and the markets nosediving at the time. And obviously, some of you guys, maybe 10-20% of you guys, were watching the videos of me at the time, going through that 2019, going down through 2020, and making videos on the stock market through that period of time. And I remember that, being a bit of a, brutal period of time. Every day the stock market was down huge amounts. But we did come out of it pretty quick, and we did go on a fantastic rally. It's now unbelievable to see that we're kind of, getting towards them levels. We've been on a dip that's more aggressive than them CV times, and now going on longer than them CV times. And you generally look at the situation in the world right now, and there's a few issues out there without doubt. There's been a few issues in 2020 that's caused harm to the economy. But you look at a lot of these businesses, and these businesses that have done absolutely amazing financially, and like I said, there's a few having some impacts. But then you look at them, what has been what they've done in the last few years, and what they'll continue to do in the next few years, and the damage that they've had on the valuation. There's insane valuations out there. And I also wanted to make this video on the weekend, but I wasn't well enough to do it. I was actually going to say, the funny thing is that it just feels so negative out there at the moment. Is that actually last week it actually seemed like a really ugly week. But actually, we were up on the week. Last week seems really a really painful week in the stock market, especially because we had the Friday, and the Friday was so ugly. But we were actually up on the week, which is a funny thing. But just because we just keep getting hit with them big red days, it just makes you think that this downtrend's going on forever. But yeah, just thought I'd open up with that anyway. The next bit is we've got the inflation data this week. That's going to be key for the markets. Obviously, we've seen the markets really been spooked since we had the 8.5 to 8.3%. Carried on moving in the positive direction, but clearly not as happy as what people were expecting. And that's really spooked the market since then. This time round, we're not expecting as big a drop. We're expecting 8.5 to 8.1. This time we're expecting 8.3 to 8.1. So people are clearly not expecting a big drop this time. But obviously it's important that we're still moving in the right direction. So that's going to be key for where the markets go. We'll get that on Thursday. Something that's actually negatively happened in the last few days is oil. Oil is actually starting to touch down to $76. Unfortunately, because of OPEC, it did have a run up back up to the 90 range, which obviously is not what we want to see. As you can see here, the run up that we have had. Now, with the markets having a bit, obviously that's a short term thing. Obviously, with the markets having a pullback, it is starting to fall back down into the 80s. Hopefully, that can continue to go down back into the 70s. And then into the 60s, so that's something to keep an eye on. But that's something that I noticed in the last few days, which isn't a positive for the markets. And that's just a few of the individual things that I wanted to talk about a couple of days ago, but I couldn't because I wasn't well enough to make the video. Just a couple of stocks that I wanted to point out and talk about really quickly. DraftKings. DraftKings has been slaughtered in the last 5 days. 22% down in the last 5 days. Absolutely devastation for DraftKings stock in these last 5 days. And funny enough, we did have a little bit of a pop on Thursday, Friday. We were up 12%. We ended up only closing up a couple of percent up. That came off the back of the news that ESPN and DraftKings could be partnering, which we thought would happen, or I thought would happen, and I've said before, because Disney were looking for a partner. Disney don't directly want to be involved in sports betting. However, they want to have some exposure in there because they know it's going to be a big area in the next few years. Disney own a stake in DraftKings, so it makes sense for Disney to be looking to partner with DraftKings, which happened as what we think is going to happen. So yeah, this is a win-win for Disney because they want to have more exposure in here. Win for DraftKings, obviously having that exposure on ESPN will be massive, and these are the sort of partnerships that will take DraftKings to the the number one player really, because you have one of the biggest broadcasters there. You're advertising all over that. You link them in between ESPN and DraftKings. Obviously that's going to be major for DraftKings. Disney, ESPN obviously will get some reward out of that. So yeah, this is a win-win situation for DraftKings and what they need to carry on landing, like the Amazon deal they have now, the ESPN deal, if they want to get to the number one player. And obviously this will hopefully save a lot on their marketing spend as well. So yeah, this is the sort of deals that we really do want them to be making, and which is happening. So I thought this was really positive news. Obviously the market liked it as well, but by the end of the day it gave basically most of the gains away, and we only finished a couple of percent up. Then really since Monday we're down 22%, and there's not really any big news that has happened or why it should be down 22%. The only thing that has kind of come out here is that people have noticed DraftKings and other backers, mainly FanDuel, have started to pull back on ads to legalise the Cali. We know that obviously Cali are having a vote for sports betting to be allowed in November time, and the suggestion is, or the polls are saying that is not going to get passed and sports betting will not be allowed in Cali, which obviously will be disappointing. However, for some reason that has led to a 22% drop in the share price of DraftKings, which is just absolutely insane. Obviously it's disappointing that Cali might not come online, but to cause a 22% drop is insane. At the end of the day, this is a win-win situation for DraftKings, because if Cali doesn't come online, fair enough, it probably will come online at some point. And obviously it won't get that revenue growth from Cali at the moment. However, the other positive is that that will allow DraftKings to build up them states that to get some more profitability to support the business. and will help the bottom line more. So either it has more revenue growth and loses more money, or it has less revenue growth and it makes more profit. So it's a win-win situation. And the thing is with DraftKings is that, sure, Cali might not come online, but there's still all the states that they currently have that are driving good amounts of profitability. The states that are online are still growing at insane rates. You've still got other states that have come online this year, like Kansas, for example. They're still going to drive, the revenue forward at insane rates. And there's still plenty of states for DraftKings to go for. So what if Cali is not going online? There's going to be plenty of states in 2023 that are going to be coming online, and DraftKings will be, launching in them areas and will drive revenue growth forward. So, it's still early days. So I generally am shocked to see why this is down so much off this news. It's not at all should be affecting it, and it hasn't changed the story at all. So absolutely bonkers from the share price here over the last 2 days. And you guys probably know I did buy the dip on it because I thought this was insane stupid moves. And the next thing is Holland Ball. Holland Ball has been having a bit of a run up recently, up 12%, which is in a period of time where everything else has been dying, which is pretty impressive. I still think this is a crazy 8 times earnings. 4% dividend yield, not a 1% dividend yield. They actually came out with a trading statement for the year end, and it was very positive. You'd be able to see here that they came out and said that total revenue growth of 42%, and that's compared to financial year 19. So this is before the CV times. So that's absolutely insane. Like-for-like revenue growth as well of 28%. The group also expects EBITDA growth of 40% as well. Unbelievable. 10 refurbs, 3 new centres opened, more centres getting the pins on strings, which is giving them better margins. A further 10 centres targeted for opening before the end of financial year 25. Obviously, they've started to expand into Canada. Strong momentum in Canada following the acquisition of DraftKings Holdings. Trading in line with expectations. First new centre acquisition completed in Kingston, Ontario, and the first refurb expected to complete in H1 financial year 23. The group sees opportunity to add up to 10 centres over the next 5 years, with the potential of at least a further 20 over the next 10 years. And they've got 56 million cash and undrawn 25 million revolving credit facility in place as well. So, I mean, absolutely unbelievable earnings. And I do generally look at this business here, and I mean, it is funny to see it being on a bit of a run before this trading statement. I always think, do people know something that this was coming out? But, this is just another prime example of this. Even if you take this jump before CV times, the stock's still 10% down on what it was pre-CV. And if you take it where it was, had that little bit of a jump because of how good the earnings were before the CV times, it's down 32%. And you're looking at another stock like this that's down 32%. That comes off a 10 out of 10 earnings report, compared to the last, financial year 19. The revenue's up, 42% on that period of time. EBITDA's up 40%. And you've got a stock trading at these sort of levels, below where it was in 2019. And the business is nowhere near the same. And it's just the market that we're in. There's a lot of opportunities like this out there at the moment. Just shout out to DS Smith. I thought these guys actually came out with some pretty impressive update as well. After seeing these guys, it's a UK company that basically is a packaging company. After seeing FedEx's earnings, I was like, oh, these guys are going to struggle big time. 13 times earnings, 5% dividend yield. They've actually come out with earnings that were absolutely really impressive. They actually said that they're actually doing very well with saving money, cost cutting, and they're actually seeing profit to be ahead of expectations, which is fair play because I would not expect this from this business in this sort of time period. So yeah, well done to them guys. I thought that was a standout one that came out earlier this week. And AMD, a lot of you guys have been asking in the comment section about AMD and my thoughts on AMD. For me, the semiconductor space is a space that I don't have much good knowledge in, and I normally just tend to invest in what I know. I always think, you're better off investing in what you know, and that will help you understand the business, give you that little bit of advantage. Semiconductors, I don't have a great understanding of. I've always tried my best. I've looked very much into Micron, never bought it. I remember looking into AMD back in like 2017 when it was $12. And I was like, I'm still not sure. And obviously it's done absolutely amazing since. And a few guys were asking once again about it. And same again, I might try have another look at it, but I generally don't have great knowledge in this space. But what I'd say is the financial performance of this business has been amazing. Lisa Sue, since she's come in, has done a fantastic job as well of this business. It does look quite cheap now at 23 times earnings, though I would expect the profit to be dropping off quite a bit, so that might not be a correct P ratio. And it is having a massive decline, as you can see here. You know, it's back down to kind of levels it was at July time, which funny enough links to what we were just saying about the Nasdaq being at the lowest since July 2020. So a few people are seeing opportunities in this space for AMD. Personally, for me, I think it's worth a look because it does look a fantastic business. But for me, my knowledge is a little bit limited in this space here. But I can see why a lot of people are interested in it. But that's having a bit of a drop after they came out after warning that they're not going to meet expectations, as what you probably would expect, because you know Intel have basically been doing the same, Nvidia have been doing the same. So it obviously seems such a common. It was kind of to be expected. And I think actually when they did come out on the day and they did give the warning, like I think the stock was only down like 1% in pre-market, and it wasn't until like the markets actually opened up that eventually like it actually then got punished like 16%, which I thought was a bit of a strange move. That everyone was fine in pre-market, and then as soon as it opened, everyone like then dumped the stock, which was really weird. But yeah, I mean, I know a few guys have been chatting in the comment section, but that's probably why you won't hear me mention it too much. But I don't blame you for looking at it, because if you do have good knowledge in that space, I would be looking at that stock as an opportunity for sure. And you know, maybe I should actually give it a chance at some point and have a bit of a deep dive into it. But it's just one of those at the moment. There's so many stocks on sale and so little time and little money to kind of, you know, you're trying to make sure you're focusing on, you know, not getting sucked into too many opportunities out there. You know, you're trying to figure out which ones are the best opportunities for you. And I think that obviously this is one of those tricky ones where it could be a fantastic opportunity, but there's just so many out there at the moment anyway. So anyway, I hope you enjoyed the video, guys. Sorry if it wasn't my normal standard of videos, what I normally do, but I just wanted to get a video out there anyway, guys. So hope you enjoyed it anyway, and I'll catch you in a bit.